Hey everyone, Eric here. Today, we're going to learn how to calculate CAC for SaaS businesses or really any B2B business or business that has a sales team. This calculation is a little different than for businesses that sell direct to consumers because those businesses generally do not have sales teams. So by the end of this video, you will understand which expenses to include and exclude from your CAC. We're going to walk through an example of exactly how to calculate it. So first, briefly, let's talk about CAC, customer acquisition cost. What is it? It's how much it costs the company in advertising and sales expenses to get one brand new customer to buy for the very first time. Their subsequent purchases, we don't care about. We're trying to figure out how much it costs to get that new customer to make their first purchase. Why is this important? Because if you know your customer lifetime value, your LTV, which is the total profit you expect to make on your relationship with one customer over many orders, you can then use CAC to understand your payback period and predict your future profitability. So it's an essential metric, and let's dive straight in to CAC for businesses with sales teams. So, rule of thumb for CAC for all companies, if it touches the prospect, include it. So, expenses to include in CAC, all paid advertising spend. So with paid advertising, you're paying a company to serve ads to their audience on behalf of your company. And so those customers directly have contact with those ads. So definitely always include that. Also, if you have a direct sales team, you include that, the salaries and the bonuses of those people, because 100% of their job is focused on contacting people who might be potential customers, we call those prospects, and then trying to get them to buy. So we include that because that's touching the customers. Expenses to exclude from CAC. Salaries of the marketing team. There's a very common mistake. People include salaries of the marketing team. Should not do that. So what's a typical marketing person? Could be a search engine manager, optimizing links on the website. It could be the VP of this, or VP of marketing. Maybe someone who does PR. Basically, all of the people on the marketing team are having no interactions with the actual customers. The sales people are, but the marketing people are not. So you do not include them in your CAC calculation, which is a calculation that tells you how efficiently you're doing your advertising. Also, other marketing expenses like consultants, marketing software, all this different stuff, if it doesn't touch the customer, you need to exclude it because it really has nothing to do with your sales funnel. So now let's talk about the customer data that we need to use to include in our CAC calculation. Again, a lot of errors with this, so I want to clear this up. In CAC, you were including new customers, brand new customers. And when we say customers, we don't mean new orders. We mean new people, individual customers. So those, and we usually break these out into two categories. You have your customers coming from your paid advertising channels, so anywhere where you're serving ads. And then you have customers that come from what's called organic channels. And those customers are coming in for free through things like word of mouth, referrals, search engines. It could be social media, but organic posts where you're not paying to advertise. Those are basically free new customers. What do you exclude from CAC? Recurring customers. We do not care about recurring customers for our CAC calculation. Recurring customers have more to do with lifetime value and retention, but for CAC, we're just focused on those new customers. Also, orders. Remember, we're focused on individual people. One person can make an order, like they can come and buy for the first time and make an order and buy two of something. So make sure that you're not including total orders, you're just including total unique customers. So now let's walk through an example with basically some data I made up for a company that would be like a SaaS company or a B2B company, business with a sales team. And we're going to try to figure out, what do we exclude, what do we include in CAC, what customer data do we include and exclude to figure out our paid and our blended CAC. So first things first, let's look at all these operating expenses, and these are all related to sales and marketing, but we don't include all of these. The most common mistake with CAC is to just include all this stuff. And that's wrong. It's completely wrong. So let's go through line by line. Okay, marketing team, include or exclude? No, these people have no interactions with the customer. Exclude it. Sales team, payroll, absolutely. Include that. and include their commissions, which are their bonuses, because they'll get paid bonuses if they make sales. What about marketing software, like some kind of project management thing like Asana or whatever? Definitely not. Exclude that. Has nothing to do with the customers as an internal thing. Facebook spend. Yeah, that's advertising. We pay to advertise on Facebook. Include that. Google, same. Television spend? Absolutely. We pay to show commercials on television. Customers watch those commercials, and then they decide if they want to basically come to the website. Include that. Consultants? No. That has nothing to do with the customer. So our total acquisition cost is $655. Control C, Shift, right arrow, Control V. That's copy paste. Okay, so we have the total bucket, but now we want to figure this out on a per customer basis, which is customer acquisition cost. So what do we include? So here's a bunch of customer data. We have new customers from paid channels. So if we look in our Google Analytics or our Facebook Business Manager or Google AdWords, we can see how many customers clicked our ads and then bought. And so paid customers are customers who we are attributing directly their sale to the paid advertising. So we're saying 50 customers came through our paid channels, and these are new customers. And then we're saying 7 new customers came through organic channels. So not through our paid advertising, but they are new customers and they did buy, and we didn't do any advertising to get them to buy. Okay, what about recurring customers? Do we include those people? No, we do not include that in CAC. What about total orders? No, for the purposes of CAC, total orders is not important, and you do not want to include it because it will make your CAC look lower than it really is. So there's 2 types of CAC. Make sure when you're calculating CAC that you always calculate both, or at least label the one that you do calculate. So the first is paid CAC. Paid CAC is your total paid advertising divided by the total customers that we can attribute to those paid channels. So in this situation, it's your total acquisition cost divided by customers from the paid channels, because the acquisition cost is the cost of all of our paid activities. So we're saying this is $13,100 for our paid CAC. And so blended CAC, the numerator of it is still your total acquisition cost, but blended includes paid plus organic. So that gives you more of an overall picture of how much is it costing to get one new customer regardless of where they came from. And so that's always going to be lower than your paid. In this case, it's $11,500. And now I'm going to hit Control C, Shift right arrow, Control V. And in this situation, you see that our paid CAC is going down over time and our blended CAC is going down. Of course, this is just a couple months here, but this is how you would calculate it. Oh, and in case you're wondering sort of what is the average CAC for kind of a SaaS company, the dollar value is not important. It's more the time that it takes to actually get paid back for your marketing investment. And a lot of businesses, it's like a year. So if your lifetime of your customer, you're expecting on average is like, 3 years or 4 years, a lot of times you'll make the sale, invest a bunch of money in advertising, and you'll spend like a year making the money back. And then the tail end of the lifetime of that customer, 3-4 years, you'll be making all profit on your relationship with them. So that's pretty typical. Of course, there's no rule of thumb. From a very basic standpoint, you just want your LTV to be higher than your CAC, and ideally many multiples of it, 5 or 10 times your CAC even for some of these SaaS businesses. Okay, well, I hope you learned a ton in this video about how to calculate CAC for SaaS businesses or businesses with sales teams. By the way, in the description below, you can download this Excel file for free if you want to use it for yourself. I've also linked down below to my video on calculating CAC for businesses that sell direct to consumers, which is a little bit different because there's no sales team usually. And if you found this content valuable, please subscribe and click the little bell icon, like this video, and leave me a comment below. And also check out my online courses if you need to improve your Excel and finance skills. That's all for today. Thanks for watching, and I'll see you in the next video.